What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, I try to share with you the stocks at the top of my watch list going into the week ahead, as well as how I feel about the market conditions. Now let's just get started with one of the stocks that I pointed out a few weeks ago. Okay, so this is a company called LICY. I pointed these guys out back on September 10th and I said, hey guys, we got a double bottom right here, right around $7.75, maybe $8 right here. And if we see momentum going back in the bullish direction, that could be a great entry point because we already had highs around $12. It turns out that is exactly what happened. We bounced off this basically $7.75 level. We found a little bit of resistance right here at around $9, but we were able to break through this. That is when I got in right on this day here. And now we have traded as high as $13.98, come back down right now trading at $12.36. I currently have a kind of small size position in it, but we are up 38% on that position right now, so we're doing very, very well. Now, when it comes to market conditions, let's just take a quick look at our indices. This is the chart of the NASDAQ. This focuses largely on technology. And as you can see here, we had some pretty major resistance around 14,200. It acted as resistance twice right here. We were able to break through, and now we are coming back down to that exact same level of resistance. We've also crossed below our 20-day and 50-day moving averages. We are below zero in our MACD, and we're pretty much in the oversold zone of the RSI. And so there's a couple of bearish indications on the NASDAQ right now. We'll have to wait and see if this level of support around 14,200 sort of holds up, but it's going to be a very interesting week for sure. Now, the S&P 500 is also basically showing us a very similar pattern. We do have some previous support right here. We are coming down to previous support. If it falls through that support, that's going to be a very bearish indication. If it finds support right here, it could be a nice entry point. So definitely something to consider. And then the Dow Jones, this is another indices that largely focuses on industrial companies. And as you can see, they have fallen through the trend line, they have fallen through the moving averages, and now this index is coming back down to previous support as well. So we are seeing a bit of a correction in the markets. We're definitely seeing a pullback in the markets. This is not a market crash as of right now. There's no need to panic as of right now. But if we see these different indices fall through the larger moving averages and the previous support levels, that is going to be reason to start to be cautious or start to want to pull your money out and buy back in lower. But it's definitely something that we're going to have to watch over the next few weeks. Now, one indication that can help us understand how the market is feeling is the Volatility Index, otherwise known as the VIX. And this is basically a measure of the expectations for volatility over the next 30 days. So it looks at the option spreads and where those spreads are forecasted to be 30 days from now. And it's really, really interesting. We're pretty much in the middle of the range right now. We're trading in line with our moving averages right now, and we don't have any increased volatility at the moment. Now, if we see all of those indices collapse on Monday, Tuesday, I do expect the volatility index to increase dramatically, and that would be confirmation of a larger correction. If we fall through that support that I pointed out to you just now, that would be a large indication of an even bigger correction. Now, when it comes to Bitcoin, it has been an amazing day for Bitcoin. We tested $40,000 right here just like 3 or 4 days ago, and now it is trading at $48,000 USD. That is a confirmation of support at 40K, and that is exactly what we were expecting because that 40K level acted as resistance previously. So very nice to see in Bitcoin. I would say that we are still in a bullish direction as of right now, or at least as of the last 3 months. And so very interesting times for cryptocurrency. We're also seeing a nice little resurgence in Cardano, Ethereum, and Solana. So lots going on there. When it comes to COVID, I wanted to point this chart out to you because COVID in the United Kingdom is not going so well. They can't really seem to get these numbers back down to where they were in April and May, and it's definitely something to consider if you own any stocks overseas. When it comes to the United States of America, the numbers are definitely decreasing over the last month, which is nice to see, definitely going in the right direction. However, there is still a fairly high number of new cases every day in the United States. Now, when it comes to earnings, there's not a whole lot going on this week. We've got Pepsi reporting earnings, Constellation Brands reporting earnings, Levi's, and Tilray. So not a whole lot going on. And when it comes to stocks that I want to point out to you this week, I've got 6 stocks that I want to go through. Now, the first stock here is Apple. I honestly think Apple is one of the best companies in the world, and as it sits right now, it's got a nice little pullback happening from 157 down to 142. It's had almost a 10% pullback and is coming down to support right here at 137, 140 level. The reason I say that is because it was rejected at this level once right here, twice right here, 3 times right here, and then we finally broke through, and now the price is basically coming down and retesting that exact same level. I think is probably going to act as support, and if that happens, you may want to buy the bounce in the Apple stock. It's one of the best companies in the world, one of the best balance sheets that you can find, and the lower it falls, the more you should be buying. Next stock that I want to point out to you is ChargePoint. This is a company that I pointed out a long time ago on the channel here, back when it was like $15, $16. It ran up to a high of $50, and now it's literally coming back down to $19. So this is pretty crazy volatility on this one. But the reason I want to point this one out is because this $19 level of support is super important. You can see it quadruple tested right here in a matter of like 2 or 3 months. This was a major level of support. It ran back up to $35, so it nearly went up by double, and now it has come right back down to that exact same level. So I am watching very closely for the bounce off of $19. You could almost get into this any point and put a stop loss at, like, let's call it $18.50, maybe $18.90, and you would be able to get a very nice risk to return ratio. I think it's easily got room to go back up to 25, and so I'm watching ChargePoint very closely for a short-term trade, a bounce trade off of $19. If it falls below 19, I think you do have an opportunity to short it, especially if the rest of the market starts to dip and starts to correct. Then it could be a nice shorting opportunity, but ChargePoint is really coming down to an inflection point where I think something's going to happen. Next company that I just want to talk about here real quick is Zillow. This company has actually got a lot of notoriety on social media lately. A couple of people are calling them out for their business strategy, but if you watch Andre Jick's video about Zillow, it's a really interesting breakdown, and he does a great job kind of explaining how a lot of the misconceptions around Zillow just aren't true. So definitely take a look at that. But Zillow, I did some just basic research on the company. They have a price to sales ratio of 6x right now, and they have 4 quarters of profitability in a row. That is very nice to see from a company like this. They're growing extremely fast. The only risk to Zillow is the housing risk. They do own a variety of properties, and if the value of those properties goes down, it means that their holdings are worth less, and they also will make less on the transaction fees. So lots of risk with Zillow, but the reason that I like it and the reason I think there's an opportunity here is because it is down by over 50%. It went from a high of $208 to a low of $92 where it's at right now, and it is sitting on some pretty major support that was established last year. So we'll see if that holds up. There is some housing risk here, but I do think Zillow is trading at a pretty reasonable valuation. And if you can get in when this trend line breaks, when we see a bounce off support, and when we cross through our moving averages, if you get some nice indications down here as well, I think that could be the stars aligning for a good entry point into Zillow, because I think long term that company's pretty well positioned and I like their technology. Now the next company I want to point out is Hyllion. I've been following this company basically since they IPO'd or kind of went public, and they've done absolutely terribly since then with regards to their stock price. It's fallen from above $30 now to around $8, and the reason it has caught my eye right now is because this $8 level again has acted as major support. We're seeing big corrections in some of these volatile companies, and now they're coming down to key levels where in previous instances they have bounced off those levels. So that's what we're watching for. And when it comes to Hyllion, you can see it right here, this $8 level. We bounced off in April, we bounced off again in May, we bounced off again in August, and now we are trading right on $8, and it's going to be really interesting to see if we fall through $8. That's going to be a very bearish sign, but if we bounce off $8 again, that could be a nice swing trade opportunity, at least up to $11, maybe up to $12. Now, if you are interested in seeing any of my trades, like that LICY trade at the beginning of the video, I post all of my trades in my Discord chat, and if you're interested in signing up for that, it's $5 per month. You get access to the entire Discord chat room, and you can see all of my analysis, all of my trades, my entries and exits, basically on a daily basis, so that you can stay up to date and you can share your resources and get access to everybody else's analysis, resources, and trades. So if you're interested in joining that community, the links are down below. It's $5 per month, and you also get access to my full weekly watch list breakdown, which is an Excel sheet with all of these charts. So definitely check it out. But the next company I want to talk about here is Well Health. This company is really interesting. I've interviewed the CEO, I've reviewed the company. I like what they're doing. They're basically the Berkshire Hathaway of the healthcare industry. It's a really cool model. It's a really innovative idea and concept, and healthcare has just received a massive focus over the last few years. Now, what's interesting about this company is that this stock price is trading within a major channel here. So right around $6.75 up to around $8, between $8 and $9 here. It has been basically just trading sideways for about a year. It has not done much in almost a year's time. And so what I am watching for here is a bounce off of support right around $6.75 to $7. And I want to ride that back up to $8 or $9 here. So that's what I'm watching for with Well Health. If it falls below $7 here, that's going to be a very bearish sign. And it's also very interesting because institutional investors have also bought in at a higher price than what it's trading at right now. And so if it falls below, it means somebody's analysis was way off. But I do like the company. I like the CEO. The stock is trading within a channel. You want to buy in at the bottom of the channel, stop loss just right here outside of the channel, and you want to ride it back up to the top. That's what I'm watching for this week with Well Health. Now, when it comes to NanoXplore, this is a graphene company that I covered on the channel several months ago, and I'm super bullish on the graphene industry, but it's definitely a tricky, a finicky, and a very technical industry, but NanoXplore seems to be doing well. Now, their revenue over the last 3 years is not super impressive because it's not growing very much, but their technology portfolio is, and that's what's very exciting about this company, and I think that is what is driving this stock up higher. And as you can see here, this stock just continues to break through previous resistance. So right here at $4.50, we break through in the beginning of July, new resistance at $5.60. We break through at the beginning of September, new resistance at $7.15, and we are now testing that resistance right now. So I'm very excited about NanoXplore. I'm super bullish on the graphene industry in general, and if you want to do more research on this industry, check out NanoXplore and Zen Graphene. Those are my two favorite companies in the space. Now, the last stock that I want to share with you here is Carnival Corp. With COVID numbers going down, or at least in the United States, I think Carnival Corp is going to be well positioned in the future. Obviously, they've taken a hit during COVID. They're way down from the highs, but if we start to see a recovery over the next 6 to 12 months and this vaccine really rolls out and these numbers stay low, Carnival Corporation could do very well during this period. Now, as you can see, we had major support right here at around $24. We fell through $24 down to a low of $19 as the COVID numbers were going up. The COVID numbers are now going down and the stock is starting to appreciate. So I do think there's a very large correlation between the stock price and COVID numbers both globally and in the United States. But as these numbers go down, I do think Carnival Cruise Line is well positioned. They have now broken through $24. We retested it on Thursday of last week. We opened higher on Friday, and that could be an indication that we are going to move higher this week. So I'm going to be watching Carnival Corp very closely. Now, just as a quick summary, we have very mixed market conditions right now. We do not have a ton of strength. We're in the middle of a pullback, the middle of a correction. It is not a market collapse yet, but it could be the signs and the indications of one. So we have mixed market signals right now. You need to be very careful. Watch the indices, watch the VIX, watch the cryptocurrencies, and make sure that you're aware of what's going on in the big picture before you make any trades into individual companies. That is super, super important. And if you're worried about any of your trades, put a stop loss on, put a trailing stop loss on, and protect your portfolio. Now, if you need help in learning how to do any of that, if you need help in finding any of these stocks, or you just want to learn a little bit more about the stock market, definitely check out my free course. It's called Stock Market Fundamentals, and it is hosted on Skillshare, where you can get access to over 10 hours of content that will walk you through step by step everything you need to know about getting started in the market the right way. Now, you can access it by clicking the link in the description to this video. It will take you there, and you get 2 weeks of free access to the entire platform. If you cancel your subscription in under 2 weeks, you just got my entire course for free. I highly recommend it, and it'll be the best free resource that you can find online. Now, if you got any value out of this video, remember to click that like and subscribe button, and I will see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.